Hi, guys. Just thought I'd touch base. I know that as the year started off, we've had a bit of a market correction, and I know that's troubling to see. We've had so many consecutive months of really good market growth, and all of a sudden it's like, oh, you feel like you hit the wall. There's a various reasons for that. First of all, it's very normal. This stuff does happen in the market, and I just thought that this would be a good time for a pep talk, and so I don't want to overstay my welcome. And you may be getting this video actually a couple days after I record it, so who knows what the market's doing then. But chances are this correction feels like it might be a little more durable. That happens too. So I just thought this would be a perfect time for a pep talk. And there's two things that I hang my hat on personally, and I tell others to do so during market duress and you don't feel good. No one likes to see their statements and the balances go down. Strategy number one, take inventory. And what I mean by that is take a step back and go, okay, hold on. Do I have money in the bank for emergencies? How's my debt situation? How's my cash flow? Okay, I'm employed. I have money in the bank, and this money is definitely for the long term. So take a deep breath. It's fine. So just sometimes just kind of going over a nice little tick list of where you're at and what the money's for. It just kind of helps you recalibrate. And a strategy too, getting a little more wonky, but dividends and income. When you look on your statements, and when I do this specifically when the market's down, I will look at the column that has shares. You'll notice you have your security, and you'll have how much it's worth at that time at your statement period. And then you'll see how many share quantities you own. I like to look at that number because that number doesn't go down typically, unless you're taking money out of your account, but typically it doesn't go down. More so, it goes up. And the reason it goes up is, if you'll notice, you have dividends coming into your portfolio. Now, when the market's going up, we don't really notice the dividends, but they're always in there. When the market's going down, dividends become your almost like a life rope. And that dividends will come into your account, and they will buy more shares of whatever security you own. Now you have more shares. Now, when we come out of this correction, however long it takes, you'll have those many more shares to move up. So dividends are massive, and they're so important. In fact, I will point this out in recent reviews that folks, long-term returns, 30 to 60% of your return is coming from dividends and capital gains being reinvested in your portfolio. And when you are in stormy weather, it's just nice to have dividends coming in at all times, buying shares while the market's down. So just again, take inventory of where you're at, and you'll find that it's not so bad, and that the money was there for the long term, and you're okay. And then two, pay attention to that dividend column and what's being reinvested in your portfolio. You'll find that it's I guess, nature's own way of naturally making you a good investor. When the market's down, those dividends buy more shares. But if you have any other concerns, or if this pep talk just wasn't quite enough, do call our office. I would love to talk to you, help you out in any way, lend perspective. Thanks for your time.